In this video, we're going to be reviewing Tesla's stock chart on a weekly chart, and we're also going to be going over the valuation through my discounted free cash flow valuation metric tool that I use to value companies and start positions in for investing purposes. So first up, we're going to look at the charts. First, right off the bat, we see here I shared this about a week ago. We have a massive 3-year inverse head and shoulders that is formed here. And within this right shoulder, we have another inverse head and shoulders. And as you can see through this wider blue horizontal line, that is going to be your 3-year. And this smaller blue horizontal line is going to be your 1-year inverse head and shoulders. And as you can see, we are getting, after today's big move, we are getting very close to a multi-year inverse head and shoulders breakout of a 1-year, yes, but more importantly, of a huge 3-year inverse head and shoulders. The measured move from taking the head all the way to the top of the measured move on the weekly is about 32,000 bars. So right around $581 expected move. Just massive on the inverse head and shoulders. It's quite exciting being a Tesla shareholder and seeing this, and knowing that right around 270 to 275, we're going to be breaking out. And if we hold above 270 to 270, I would say if we hold above 275, we are going to continue higher. And we have a couple price targets here. We have a 340 price target with this volume gap. This volume gap is already filled after earnings, as you can see. Well, actually dating back to really last earnings. That one's already filled and we're already above that one. We'll probably might consolidate for a little bit, but probably not. We are there's a lot of excitement in Tesla right now for a lot of shareholders. So the next move is going to be 342, and then after that we have a measured move of this head and shoulders, the 1-year, up to about 427.89, and then the bigger head and shoulders move is up to about $581.29, which is massive. It's over doubling your money from where we are now. So that's what I want to talk about first. Next, we are fully set up. I do a 5-step trading strategy, and before I enter a trade, I'm long-term. I'm a long-term investor in Tesla, so it's not really a trade for me. I do have some leaps and other options plays with this name, and I'll probably add more once we confirm this breakout, and then possibly retest. I'll probably buy a little bit once we confirm the breakout, and then buy a little bit more off the retest if we do retest. So the first indicator I use in my 5 for 5s trading strategy setup is going to be having a charting pattern, which obviously we have a 3-year inverse head and shoulders and a 1-year inverse head and shoulders. The second thing I use is the volume weighted shelf. So making sure that we're going to be able to move seamlessly and smoothly through one of these volume gaps off a volume shelf. So we were sitting on a volume shelf, move seamlessly through it, and now we are sitting on another volume shelf, and then I foresee us moving seamlessly through that as well as things keep on looking rosier with Tesla. Those are the first two things. Third on the 5 for 5 trading strategy is going to be your MACD. We are above zero line, which is very bullish, and we did not cross down blue through orange, which is very bullish sign. We stopped, bounced, and I continue this to even go higher after the large move today. So we're making higher lows and continuing an uptrend on the MACD, which is bullish. Next, we have RSI, continue to uptrend. We are purple over yellow, which again is bullish. And then the trend, the stochastic indicator, is the only thing I would say. So I would say we're 4 or 5 right now, but after this takes a little bit of time to move, maybe a week or two. And after today's big move, I fully see us, as we made this lower high from this bottom and made this other lower high. You see we nicked there, and we're going to bounce, and this is going to move through the yellow line and back up to an uptrend, I believe, and move up here. So we're not 5 of 5 yet, but with this big move today, I foresee this red line coming through the yellow line and the trend being in an uptrend again. So those are the 5 things, 5 indicators I look at for a perfect trading setup for myself to enter into a trade. Obviously, like I said, I'm long Tesla. Now that we looked over that, I would like to go over my valuation model through my discounted free cash flow model that I have. So you can see here, this is all hand built. I made this discounted free cash flow model. I threw in some other great key indicators like free cash flow yields. So this is your forward free cash flow yield. I have EPSs in here, what their EPS is supposed to be for 2024, 1 year out EPS, next year's EPS 2025. I have their PEs. It's all calculated. I have all the equations in this and everything. And then I have my PEG ratio. And basically, I have a 5 for 5 trading strategy. I have a 6 for 6 valuation score. I will deviate from this though, depending on the story. And Tesla is that story that I will deviate from this. I don't think you can base the valuation off any of these metrics. I think, just like Warren Buffett always says, free cash flow is king. And I believe free cash flow is going to explode for Tesla as they bring on robotaxi, as they continue to increase margins through services and continue to increase margins through their energy storage business as that gets bigger, as we see with Amazon and Meta and all these other big companies that are starting to get into nuclear. I believe Tesla wins off that as well. And so with a 10-year, so 2023, a multiple of 30 I have for Tesla, because I still have them growing in the 20%, and just being a strong moat company. And these are my revenue growth projections over the next 10 years, essentially. And these are only going off of what analysts say. I'm actually more bullish on the growth rates and where they're going to be than analysts are. And then I have them getting to a 10% free cash flow rate over the next 1 to 5 years, and then a 15% free cash flow rate over the last 5 years of this 10-year projection. And that spits out our number at about $325 intrinsic value or fair value for Tesla stock today, which is obviously significantly under where the stock price is right now. So we're looking at about a 20 to 30%, in my opinion, and based off this kind of free cash flow model. If you don't want to take these other things into consideration, like I do not, because I believe in the growth story, I believe in Elon Musk, and I believe in these products that are coming. I'm okay with overpaying for this company based off of these metrics, but I really am about free cash flow and believe their free cash flow is going to explode higher over the next decade. Hence why I have a $325 fair value margin on this business, which is Tesla. And like I said, you have a 20 to 30%. If you're going to go by this free cash flow model, you have about a 20 to 25%, I would say, margin of safety in your price. And yeah, 21% as of today. So I hope you enjoyed this video, and I look forward to making more videos just like this. If you want me to run one of your companies through my discounted free cash flow model, I have lots of other companies that I track here. Not all of them, obviously, but I do track a lot of them. If you want me to chart a company you're looking at, or if you want me to do valuation on a company you're looking at, just let me know. If you want this discounted free cash flow model, I am actually giving it out for nothing, for free. Just send me a message on X, and I'll get it over to you. Just shoot me your email, and I'll get it over to you as soon as possible. I appreciate all of you guys tuning in if you made it this far into the video, and I hope you guys have a great rest of your day. Thanks.